It was meant to be an ordinary Tuesday morning. Margaret, 71 years old, signed into her banking app, the same way she does on the 3rd of every single month. She was waiting for her Social Security deposit to arrive, but the figure showing on her screen looked incorrect. Where she expected to see $2,042, only $1,021 had landed, half of her payment, missing. There was no phone call, no advance notice, no clear explanation anywhere, only a slim, white envelope resting on her counter from about 3 weeks earlier, one she had never opened because she assumed it was simply mail she could ignore from the government. If you happen to be watching this right now, please don't click away, because the situation Margaret is facing is unfolding for thousands of retirees all across the country this year. And it can be prevented, but only when you know exactly what steps to take during the next 30 days. Hello friends, I am Milena. I work as a senior policy analyst, and for many years I have helped retired Americans make sense of the rules that quietly chip away at their benefits. Today I need to speak with you about something the Social Security Administration has officially confirmed, a policy that permits them to hold back 50% of your monthly payment automatically, without a phone call and without a second written notice. I'd like you to take a slow breath. You are not in any trouble. And I'm going to guide you through exactly what this policy says, who it impacts, and the 3 forms that can completely halt it. But I have one small favor to ask of you. Please stay with me right through to the end, because there is one mistake, a tiny mistake, that nearly every senior makes when this letter arrives. And that single mistake is what separates keeping your full payment from losing half of it for several years ahead. Let me share the story of Robert. Robert is 68 years old. He spent 34 years working as a maintenance supervisor at a hospital located in Ohio. He retired at 66, filed for his Social Security, and began receiving roughly $2,100 each month. Robert handled everything correctly. He paid his taxes on time. He even picked up a small part-time job at a local hardware store last year, only about 4 mornings each week, because he wanted to keep busy and help his daughter cover her mortgage. Here is exactly where the trap closed around him. Robert had no idea that his part-time earnings had pushed past the Social Security earnings threshold that applies to people under full retirement age. He assumed because the job was so small, it wouldn't really matter. He never reached out to Social Security. He never reported the change in income. For 11 straight months, SSA continued sending him the full payment. Then, one afternoon in February, Robert went out to his mailbox, and inside he found a white envelope sent from the Social Security Administration. The letter informed him that he had been overpaid by nearly $10,000, and that if he failed to respond within 30 days, the agency would start holding back 50% of his monthly benefit until the balance was settled. Robert felt afraid. He felt embarrassed. So he did what many of us do when fear takes over. He slid the letter into a drawer. He promised himself he would handle it the following week. That following week turned into the following month, and on the first day of the next month, half of his Social Security simply vanished from his bank account. Now here is the painful part of the story. Robert had every legal right to halt that withholding. He had 3 separate forms he could have submitted. He could have asked for a waiver and possibly cleared the entire balance. He could have asked for a reduced repayment rate of just 10% each month. He could have challenged the amount itself, but because he didn't read that letter in time, he forfeited those protections by default. I am sharing Robert's story today because I truly do not want it to become your story. So let me walk you through, in plain everyday language, exactly what this policy says, taken directly from the Social Security Administration's own website. Where this policy came from. On March 7, 2025, the Social Security Administration released an official press statement. The acting commissioner, Lee Dudek, announced that beginning March 27, 2025, the agency would return to a default withholding rate of 100%. That meant if you had been overpaid, your entire Social Security check would be held back until the balance was cleared. The pushback from seniors and advocacy organizations such as AARP was so strong that just 7 weeks afterward, on April 25, 2025, the agency released an internal emergency message lowering that rate from 100% down to 50%. That 50% rate is what is currently active today, in 2026, and it applies to every new overpayment notice issued since April 25, 2025. The notices still being sent out today in 2026 continue to operate under this 50% policy. What the policy says today. The SSA website spells this out in plain language. I'm quoting it word for word. If you don't pay us back within 30 days of the date on your notice, we'll automatically withhold 50% of your benefit or 10% of your SSI payment each month until the overpayment is repaid. Let's read that one more time together. 30 days. Automatic. No second notice. Who is affected by the 50% rate? The 50% rate covers retirement benefits, survivor benefits, spousal and family benefits, and Social Security Disability Insurance, often called SSDI. If you receive Supplemental Security Income, known as SSI, your rate remains at 10%. And if your overpayment notice was sent before March 27, 2025, you also remain under the older 10% rate. Why these letters are arriving in 2026? Here is something most people don't realize. Even though the policy took effect back in 2025, the letters are showing up in 2026. Why is that? Because Social Security is still processing a backlog of cases, overpayments going back 1, 2, even 3 years. And as each case gets finalized, a new notice goes out under the current 50% policy. So if you receive a letter this year, the date of the overpayment matters less than the date printed on the notice. If your notice is dated after April 25, 2025, you fall under the 50% policy. And here is something that genuinely surprised me. According to the Social Security Administration's own Inspector General report from July 2024, a meaningful portion of these overpayments were not caused by the senior at all. They were caused by SSA's own internal processing errors. That means many of the people losing half their payment this year did absolutely nothing wrong themselves. What about your bank account? Now, some of you are wondering, can a debt collector freeze my Social Security inside my bank account? The Consumer Financial Protection Bureau has a rule on this. It is known as 31 CFR, Part 212, which requires your bank to automatically shield 2 months' worth of directly deposited Social Security benefits from outside garnishment. But, and this part is critical, that shield does not stop the Social Security Administration itself. SSA takes the money before it ever reaches your bank account at all. The CFPB rule protects you from credit card companies and medical debt collectors. It does not protect you from SSA's own recovery process. And finally, the Medicare squeeze. If you are enrolled in Medicare, your Part B premium, which in 2026 is $202.90 for most beneficiaries, comes out of your Social Security payment before you ever see a dollar of it. So when half of your check is being held and then the Medicare premium is taken from the remainder, some seniors are seeing deposits of just a few $100s total, or in the most extreme cases, nothing whatsoever. That is the complete picture. That is what the policy truly says. Now let me hand you the 3 steps that can stop this. Fully. Once provided, you act on time. Step 1. Open every single piece of mail from SSA the very day it arrives. I realize that sounds straightforward, but this is the #1 mistake people make. The 30-day countdown starts from the date printed on the letter, not from the date you open it. If you wait 3 weeks before opening it, you may only have 9 days left to respond. Check the upper right corner of the notice. Locate the date. Circle it clearly. That date is your countdown. Step 2. Pick the correct form and submit it before day 30. There are 3 official forms and each one performs a different function. Please listen carefully. Form SSA-561 is the request for reconsideration. You submit this if you believe the overpayment is wrong or the amount listed is wrong. You have 60 days to submit it. Form SSA-632-BK is the request for waiver of overpayment recovery. You submit this if the overpayment wasn't your fault and paying it back would cause you genuine financial hardship. If approved, the full balance can be cleared. There is no strict deadline for a waiver, but sooner is always better. Form SSA-634 is the request for change in overpayment recovery rate. You submit this when you agree you were overpaid, but cannot afford the 50% withholding. You can request a much lower rate, sometimes as little as $10 a month, based on your income and your expenses. And here is the powerful part of all this. SA's own policy states that the agency does not move forward with collection while an appeal or waiver is pending, so submitting the form immediately pauses the withholding while your case is reviewed. Step 3. Call SSA directly and document every conversation you have. The official Social Security number is 800-772-1213. The press release from March 2025 confirms that you can call this number and request a lower recovery rate even before submitting any paperwork. Whenever you call, jot down the date, the time, the name of the agent, and the confirmation number they provide you. Keep a folder, keep copies of absolutely everything. If something gets misplaced, and unfortunately, things do get misplaced sometimes, your documentation becomes your protection. Now, before you go, I really need you to hear me on this point. Policies like the 50% withholding rule never made the front pages of the news. There was no major announcement aired on television. Most seniors only discovered it when they opened their bank app and saw half their money was gone. And this is only one policy. There are changes happening right now to Medicare premiums, pension tax rules, banking restrictions affecting seniors, airport identification requirements, and Medicare Advantage plans. New letters are being mailed out every single week. YouTube notifications alone are simply not enough. The algorithm doesn't always surface the videos that matter most to you. That is the reason I created the Global Senior Alerts official WhatsApp channel. It is completely free of charge. When you join, you'll receive a complimentary download of our Senior Benefits Protection Guide, a simple PDF that lists every form, every phone number, and every deadline you'll need to safeguard your Social Security, your Medicare, your pension, and your bank accounts. You will also receive real-time updates the moment a new policy is announced, well before it ever shows up in your mailbox. The link is sitting in the description right below this video. Click on it. Join the channel, download your free guide, and please share this video with one person you care about, a spouse, a neighbor, a friend from church, because the seniors who end up losing half of their payment are almost always the ones who never came across this information in time. You worked throughout your entire life for these benefits. You paid into the system with every paycheck you ever earned. Nobody, not an agency, not a letter, not a policy tucked away inside a press release, has the right to take what you have earned without you knowing how to stand up for yourself. I am Milena. Thank you for staying with me today. Take good care of yourself, open your mail, and I will see you again in the next video.